Welcome to the Edge Market Update for the close on September 22nd, 2023. And we had some news-packed events outside of commodity markets this week as the Federal Reserve announced that they are pausing interest rate hikes. However, futures markets, specifically the equities and the bond markets, did not like the news of them kind of spreading the theme of higher interest rates for longer with the dot plot that they projected higher interest rates longer than previous projections. So did have some negative pressure on outside markets this week, did affect commodities on Wednesday as well. But really, soybeans were the lower commodity this week with hedging pressure as we start harvest. But traders are waiting on combine data and results of next Friday's quarterly stocks report. Currently, the quarterly stocks are expected to be lower than previous month's reports. So hopefully that will bring in some bullish news, and perhaps the USDA might surprise us and bring prices to the upside. So that's what we can hope going into next Friday's USDA quarterly stocks report. Starting with new crop corn, the December contract, we closed the week at $4.77 a bushel. We had a fake breakdown on Monday and Tuesday, which is one of the most bullish setups and one of my favorite setups, as we failed at a good support level and then recovered it the following day and closed above. So we have a long-term negative trend line here from the late June, the July lower high, and then this long-term trend line coming down to our recent lows. And then we have a longer-term support here from mid-July, or August, that has held pretty well at $4.74 a bushel. And these two lines are starting to meet and they're running out of time. So price is going to have to decide whether or not it's going to fail at support and break down, or if we're going to break above this long-term resistance level, which would be that 480 to 485 area to get above that next week. Have to get above the 9-day moving average at 477. If we get above this area, certainly could break out to that 498 level eventually, which is a 50-day moving average. That would be my first target. But we have to avoid a breakdown of this support level again at 474, or else we could see new lows form in that 450 to 460 range to start. Strength indicators have long-term positive divergence. That also held this week, and we are slowly trending higher towards a neutral reading. Money flows are also forming some positive divergence here and have broken above that neutral level. So hopefully we can see some follow-through price action next week. Long-term momentum also has turned up slowly in September. Really not moving higher very fast, but we are churning higher slowly. Still in negative territory, but slowly approaching that neutral level. So again, would really like to see us break out of this area next week and test that 498 level sometime in the next week or two. Moving on to new crop soybeans, this was a weaker market, down about 45 cents on the week. We closed at $12.96 on Friday. But last week during our video, mentioned that 13.33 really needed to hold as support this week, or else we were in jeopardy of that move, and we would likely move down to this upward trend line, and that's exactly what we did at about the 13.10 area. For a couple of days, we held that level, but then on Thursday, we broke down and we failed there, and then we just kind of sputtered out here on Friday. Moving forward to next week, I would like to see that 1282 level hold. That will be important. That's the low from August. If that fails to hold, I certainly think a test of that 1256 support level from mid to late June is certainly in the cards, where definitely would not be a seller of beans, because that's a long-term support area from this long-term range we're in here from June here until almost October now. So would expect a bounce there if that does test. If not, could have an ugly situation on our hands below that level. Goal for next week would be to recover this upwards trend line here in that 1310 to 1320 area and get back in this middle range. Start recovering the shorter term moving averages at that 1326 level and get back to about 1350. Hopefully we have some bullish news again in that quarterly stocks report that can at least help us get some upward price momentum. But we are very oversold right now. Money flows are extremely weak, which typically means that a bounce should be seen at some point here. Strength indicators, this is classic negative divergence on these. So we are weak until strength indicators can break out above. Certainly the trend is lower on the underlying strength of this market. Long-term momentum, we are back to pretty close to a neutral reading in the long term, and we are moving lower with a lower high here. So really just need some bullish price action and news to kind of change the trend here, and hopefully we can get that next week. Thank you for watching this week's video. If you have any questions or need to turn any claims in, please call us right away, and we will get that taken care of. Thank you for your business, and have a great weekend.